John, it's so good to see you. I have a question that I think is on everybody's minds these days. Should retirees include Bitcoin in their retirement portfolio? So, Fidelity recently published a white paper titled The Case for Bitcoin. Here it is, and we will link to it as well in case people would like to read it on their own. And I want to talk through that paper, considering right now Bitcoin is trading right around 69,000, very near its high of just over 70,000. So, John, again, as we circle back to that white paper, I want to throw a lot of numbers at you because, of course, they're talking about the case for Bitcoin. So, take a look here. This is a 2% allocation to Bitcoin, which they say would allow for an increase in annual spending ranging from 1 to 4% and potential losses of up to negative 1% in a worst case scenario. And now here, take a look at a 5% Bitcoin allocation. They say that could allow for an increase in annual spending by as much as 9.5% for older investors, but with much steeper potential losses of up to 3% in a worst case scenario. So do you think retirees or pre-retirees should incorporate Bitcoin in their retirement portfolios?
So I love the charts. I want to make one thing perfectly clear, right? The number, the percentage allocations, you were talking 2% and 5% of an overall diversified portfolio, right?
Right. Yes.
Right. If you're invested in Bitcoin, you're going to lose at a certain point in time more than 3% or 2%. So let's just clear that. I actually read an article about 2 years ago by Rick Edelman talking about this.
Mm-hmm.
And the one thing I don't like about those charts and that study by Fidelity is they're talking about the effect it could have on your income. Me personally, for retirees, I like to build it around predictable and sustainable income. That we want to make sure the income is going to be there every month, and Bitcoin is all but predictable. So how I position it for retirees, and I do like it as an overall very small diversification, is this goes in your growth shield or your growth bucket. Mm-hmm. This is your Vegas money, right? Your gambling money. Because you have to understand, while you could hit the jackpot, you could also lose everything. This is a very volatile investment. So the same study that I read, or the similar study that I read 2 years ago, did not talk about income, but just talked about the overall effect it could have on a portfolio. Mm-hmm. And how it could almost double a whole portfolio's returns because those skyrocketing highs that it sees. But if you lost everything, because you have such a small allocation, kind of in line with the Fidelity income study, you're only going to lose a couple percentage points on that portfolio. So I do like it. Again, especially for retirees, they have to understand the big thing. You could lose all this money. Right. And that's why you only put a small percentage of an overall diversification. And this should be in your long-term growth bucket, in my opinion.
Mm-hmm. So then, big picture, how should investors evaluate the role of Bitcoin in terms of diversification, risk management, and their overall retirement goals?
Yeah, so I just kind of stated you want to have it in your growth bucket. You want to understand that the good thing about Bitcoin is it's not correlated to the stock market. So the stock market could be plummeting and Bitcoin could be soaring. That is, inherently a good thing about Bitcoin. But you also want to understand that really, in retirement, big growth shouldn't be the name of the game. It should be preservation and making sure you don't run out of money. So I wholeheartedly agree with the allocation numbers to Fidelity. A lot of my retirees, they're between 1% to 3%. And that's if they want it. Because again, when we have those discussions with our clients, we have to have that talk of, listen, this could hit a grand slam, but this could also strike out. And you have to understand that even with a small allocation, some people just don't want to lose, 10 or 20,000. If that's 1 or 2% of their portfolios, they don't want to have any exposure to that. So then we don't put it in there. So you have to just look at, yes, the big gains are great, but are you willing to gamble everything?
Right. Right. Or if it affects you sleeping at night, then just say no. But
yes.
John, it's nice to think of it in terms of a bigger picture. But if somebody would like to speak with you more about the risks and the possible rewards, what's the best way to reach you with questions?
can visit our website, www.gosecurus.com, where we have a host of investment videos where we talk about diversification. And now you can add this video as to how you can be a little bit further diverse. And while you're on the website, you can visit the Contact Us tab, where you can schedule a 20-minute phone call where we'll answer any general questions you may have. Or you can schedule a complimentary vision and clarity consultation. Or if you like doing things the old-fashioned way, Aaron, give us a call at the office, 858-935-6210. Ask to speak with Emily Whale, and she will get you on my calendar.
Great. John, thank you so much.
Thank you, Aaron.